Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good Tuesday morning. Welcome to Financial Issues. It is the beginning of a new month, July 2nd, 2024. I'm so glad that you've tuned in today. Maybe you found us for the first time and you're wondering what this program is all about. Well, this program is all about financial issues from a biblical worldview. So we help you to integrate your Christian faith into your financial decision makings, especially in the way that you invest. So let's get right to it today with our stewardship verse of the day. It comes from Galatians 6:9. And let us not grow weary of doing good, for in due season we will reap if we do not give up. Seth, what do you think?
That's good, Shana. It's good to be here with you, by the way. This is fun. The first thought that comes to mind here is that we have to exhibit patience in everything we do. This is not just with our finances. Very often when we put in the work as Christians, we won't see the fruit or the return of that for perhaps years or even decades down the road. And we might not even see the fruit in eternity, so we have to be okay with that. But in our investing, I think it's especially important. We have to exhibit patience to not grow weary in doing it the right way, knowing we're going to reap the rewards of our faithfulness someday. And so that kind of leads to today's teachable moment. This is based on a question from one of our listeners from several weeks ago. This listener really wanted to know a little bit more kind of about this idea of long-term investing versus day trading. So we had a question, I believe his name was Daniel, and he basically wanted to know the specific dangers, Shana, of day trading, the temptations of it, and ultimately how long-term investors avoid falling into the traps and the habits of day traders. So to start off, what are the different dangers of day trading? And, we often hear about the few success stories, and those tend to be the ones that really are talked about a lot, but I'm sure there are many, many more horror stories with it. What can you tell us about this, Shana, the dangers?
Sure. I guess I've heard probably more of the horror stories than most people do since, I'm in the business where people hire me to make their decision, their investment decisions for them.
Yeah.
And so I hear, over the last 20 plus years that I've been in the business, I've talked to a lot of people who weren't investing at all because they had been soured on some really bad experiences. So, they got into things that they heard from a friend or a coworker, something that was supposed to hit really big and, make them rich overnight. And they ended up losing a good bit of money. And so, maybe for years, maybe for decades, they had been, just accumulating money and not investing it. And, I have a friend who is still so intrigued. He's a really smart guy, but he's so intrigued by trading that he continues to do it in spite of the numerous stories that he tells me about his failures and his misses, and if he had just done this, how much money he would have made. And he's a Christian guy too, so he tells me all about the strategies and the almost. But he also tells me how the accounts that he manages for the longer term, which is kind of boring to him, for his family, are doing much better. So,
what a surprise, right?
Yeah. This day trading comes from a gambler's mentality. Gamblers get addicted to the emotional high that they get from a rare success. That one time that they hit it big, or they know somebody that hit it big, or, but if you really ask them, they end up with more losses than they do gains. Otherwise, gambling and casinos wouldn't be such a big business. Yeah. So they just, they get these highs from compulsively going back and rolling the dice in an effort to hit it big. Some of the other challenges of day trading are time. The amount of time that you must sit in front of a computer and watch for certain opportunities. The cost of transaction fees. The same friend that told me, that shared with me his experiences on a regular basis, told me that one time he analyzed a group of trades that he did to try to accumulate a certain, or to implement a certain strategy on a discount platform, and he told me he racked up the fees that were in excess of 10% of the volume that he was trading. So even on discount brokerage platforms, that could be an issue. And then, of course, there's the cost of taxes. if you have a short-term gain in investment where that you've held less than a year, you're going to pay taxes on that at whatever your ordinary income rate tax bracket is. If you own it for a long time, more than a year and a day, then you're going to pay the much more beneficial long-term capital gains rates, which could be 0 if you're in the 12% bracket, or most likely it's 15%, or 20 if you're in a higher tax bracket, and then closer to 23 if you include that net investment tax.
That's really helpful, Shana. And we talk a lot now. I talk with my kids often. They're still young, but I'm sure you do with yours too, about habits, getting into good habits and avoiding those bad habits. Well, we see some consistent habits with day traders, I think. Can you tell us what some of these are and how they might pose a temptation to us as we maybe watch the markets going up and down?
They spend a lot of time in the past.
Yeah.
They spend a lot of time in the past, and they spend a lot of time trying to get into the future, which as human beings we have limited understanding of. We don't have a clear understanding of what will happen in the future, even when it comes to prophecy and end times prophecy and things like that. We have limited understanding and limited ability to understand. So even the SEC, which is a regulatory body that governs financial professionals, they require us to disclose that past performance does not guarantee future results. So, day traders are often students of history, and they obtain a very good understanding of why things happened with the benefit of hindsight. But it's very rare that things will happen exactly the same way in the future. For example, I live on the coast and we have a lot of hurricanes. Well, there's some basic things that you do to prepare for hurricanes. You get extra food, you get batteries, you get supplies, you maybe have a generator, stock up on some gasoline. But you know what? In all of the storms that I've experienced on the coast, they've all happened very differently. And that same phenomenon happens in the financial markets. There's the business cycle, through the normal economic cycle, we go through peaks and troughs, but the things that cause those peaks and troughs are often very different. So it's very hard to predict the future based on what's happened in the past.
Yeah, that's really good. Speaking of good habits, actually, Shana, what about those habits of long-term investors? How do they compare and contrast differently to the habits of day traders?
One of the most telling things that I've heard is that if you evaluate a person's day timer and their checkbook register, which I'm kind of dating myself right now because nobody uses day timers or checkbook registers anymore, but you get what I'm saying here. Yeah. You look at a person's calendar and you look on their Outlook and see what they're spending their time doing all day. Or if you if you log in and look at their bank transactions, you're going to find out what's really important to a person, regardless of what they say is important. So how we spend our limited resources of time and money will really reveal the priorities of our heart. So the question really becomes, am I investing at least as much or more time in managing my money and trying to get a return as I am in the kingdom, or than I'm putting in anything else?
Yeah. And how do we sidestep these bad habits and pitfalls as we try to invest well?
Well, a good place to start is always in prayer. So ask the Lord to search your heart and reveal to you what your true motives are. A lot of people will say, you know what, if I win the lottery, then I can give a whole lot into the kingdom. If I day trade and make a huge return, then I can really support all of these ministries that I want to support. But, it's just our job to be obedient with what we have and let the Lord be in charge of the multiplication. So, I promise if you ask the Lord to search your heart, He will. He'll do it gently with compassion and love, and He'll expose those ways of thinking that may not line up with His, because His ways and thoughts are certainly higher than ours.
Well said, Shana. And what would you say to a prospective FISM partner, maybe a new partner who wants to use our strategy but kind of still falls into those old habits of day trading from time to time, or maybe is trying to kind of straddle the fence and do both?
Yeah. Well, I'd say spend some time working on breaking that habit.
Yeah.
before you become a partner with us, do not try to use our research to pick companies to day trade. You will probably not be much of a success at all. We don't focus on finding companies that are expected to go up in 5 to 10 hours or 5 to 10 days, but rather we're looking out 5 to 10 years down the road. Those are the kind of companies that we're after.
Good stuff, Shana. I had some more questions for you, but might have to save them for the next segment here, I think.
Sounds good. Yeah. We got to take a break, folks, but we're going to be back with more financial issues. By the way, if you're listening live, our phone lines are open if you want to get your call queued up. 610-363-1110. If you're just tuning in for the first time and want to learn more about our ministry, check us out at financialissues.org.
My name is Valtasia. I have 5 kids total. I was basically a single mom. I didn't have an address to my name. And here it comes, that not just one baby I'm finna have, it was 3. I honestly was not gonna keep them. I had it in my mind, deep down inside, that I couldn't do it. I came straight abortion minded. What changed my mind was I talked to the counselor and, very encouraging. They'll also tell me, you're not going to be alone. If you need anything, reach out to us or anything. I was amazed. I definitely have a challenge of having my babies. A lot of people will ask me, how do you do that? How do you maintain? Only thing I could say is prayer. Prayer really, really worked.
To donate, just dial pound 250 and say the keyword baby, or go to financialissues.org and click on the preborn banner.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same, or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan. Biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
Welcome back to Financial Issues. Thanks for tuning in today. Seth and I were having a conversation about the financial issue strategy when it comes to investing, and I think we wanted to continue that a little bit. We had a few more things to touch on.
Yeah, let's do that here, Shana. The successful long-term investor needs to exhibit certain virtues as they invest. I think we've touched on one of them already, patience, of course, in our stewardship verse. What are some others, though, that we need to exhibit?
I really like the verse that we picked for today about, reaping and sowing. It's not only a natural phenomenon that if you plant an apple seed, you're going to get an apple tree. You're not going to get an orange tree, but it's also a spiritual law. So it reminds us again to search our hearts. If you're moving toward this idea of day trading, search your heart and find out what is moving you toward that idea. Very likely, when you get to the root of it, it's going to be fear and or greed. So maybe fear that you don't have enough time to meet your growth goals. Maybe you started saving and investing late in life. Maybe it's fear that you might have to forego some of your short-term desires in order to put those funds toward your long-term financial goals. Maybe you would, rather have that boat or that side-by-side rather than, setting aside some money for way down the road. Perhaps you find out it's greed. Maybe you think, well, I've heard that, a good long-term average, if I'm investing in the markets or in, equity type of investments, I can make 8 to 10% average over the long term if I'm willing to take some risk with it. But then you think, well, you know what, that's just not good enough, because I've heard these stories of people having 20% returns and 30% returns. But you know what, I will tell you this, part of a long-term strategy, even if you average that 8 to 12%, you're going to experience some years most likely that are in that 20 and 30% range, but you're also going to experience some negative years, and that's why it really kind of averages out. You know, another scripture that we talk about a lot here at the ministry that's kind of one of our flagstone scriptures is that wealth grows little by little, that principle of little by little that we hear in the scriptures. Also in the story of the talents, I think we talked about that last week, and from Matthew 25 and Luke 19, the two good stewards that heard the compliment, well done, good and faithful steward, they posted 100% return, right? One turned 5 into 10, the other turned 2 into 4. So they both had, you know, even though they were bigger numbers, it was still the same percentage. They both made 100%. But you know what the Bible is silent on? How long they had to make those returns. In the scripture, it tells us that their time frame was, all it says is after a long time. So, you know, there we go again. That points us back to our long-term strategy. So what is a realistic expectation? And, you know, how do you double your money? Well, doubling your money is very easy if you have a long-term time horizon. And one of the ways that you can kind of gauge this or get some expectations is a very basic rule of investing called the rule of 72. And basically you find out how long it takes to make 100% return by what or to double your money. That's 100% return, based on what your average return is per year. So you take 72, let's say that you're making 8%, 72 divided by 8 is 9. So if you're making 8%, it's going to take 9 years for your money to double. This also works the opposite way, like with inflation, which we've experienced a lot of in the last few years. So if inflation is running at 3%, you take 72 divided by 3, that's your rate of change or rate of negative return here, I guess. That the answer is 24. So in 24 years, if you have 3% inflation, prices are going to double. So this also kind of gives you a hint into the importance of equities in your whole financial strategy. If you're averaging 6%, if you do the math, 72 divided by 6, it takes 12 years for your money to double. So a good little rule of thumb that I thought that was, when I first learned that long ago, I thought that was a very profound thing.
Yeah. You know, Shana, that is really helpful. Speaking of profound things, I think it's very profound when we realize how simple things in this life are, like the notion that you mentioned earlier of wealth growing little by little long term. It, you know, got me thinking that applies everywhere in life, doesn't it? I mean, if I expected Josiah to know how to obey me really well as a 2-year-old, that'd be foolish, because it takes years. You know, it takes years to be able to learn that, to help him kind of understand and realize what is sin and what is not sin, to sharpen his conscience. So if it's easy for us, I think, sometimes to think about it in terms of that way, but it's harder for us to do it with our money, because we want those get-rich-quick schemes and we want to make a lot of money. But yeah, long-term, slow growth is really good.
And you know what else it takes to train up a child? Patience.
Patience, that's right.
Patience.
Right.
The scripture says that if we don't weary in doing good, we'll reap a good harvest.
Yeah, well said. Very true. Especially when they're 2.
Tough years.
That's right.
Well, let's turn our attention a little bit to the markets. On Monday, the major indices began the third quarter. Can you believe we're in the third quarter of 2024 already? We've had a good run so far, but the new quarter started mixed. So before settling into positive territory mid-afternoon and ending in positive territory as well, the Dow ended yesterday up 0.13%, the S&P up a little over 0.25%, and the NASDAQ up 0.83%. The last week's market performance really needs to be taken, any short-term market performance needs to be taken with a grain of salt. But last week in particular, the main driver of price action last week was really the quarterly rebalances for the S&P and the annual rebalance for the Russell 2000. So, ETFs have really grown in popularity, and now you can invest in the market, so to speak. Now, we don't, because it includes companies that are not biblically responsible, but an investor could invest theoretically in the market by investing in one of these ETFs that just mirror the market, what makes up the whatever particular indice that they're trying to replicate. And once a quarter, once a year, periodically, whatever it is, these ETFs will rebalance. So they're really forced to buy and sell things to look like the market again. So we'll just kind of refocus our attention this week. The pre-markets this morning, the market does open here in a few more minutes, but the pre-markets are negative this morning. The Dow and S&P the Dow and the S&P indicating negative opening to the tune of about 1/3 of a point, and the NASDAQ a little bit worse than that. So the pre-markets are negative this morning because they're going to be dialed in to a couple of things, to what Jay Powell has to say later today when he speaks, and we're getting probably as we speak, it's probably already come out. I just haven't had a chance to look at it, or no, it comes out probably at the end of the show today. We're going to get our first labor report. We'll get another one tomorrow, and then we'll get the government numbers for labor on Friday. So the jobs reports this week will have great potential to tip the scales in favor of a rate cut coming soon if we get not so great news about the labor market. If weekly unemployment claims is any indication of the health of the labor market, I suspect that we will begin to see the next few reports for labor reveal the cracks in the labor market that I've been reading about in the research that I follow. So this could give the Fed a justifiable reason to cut interest rates ahead of the presidential election coming in November, which would mean probably September. Yep. All right. We have time to get to some questions?
I think we do, Shana. Yeah, that's a great call here. Let's start with Brian on the website. Just put this question up for us. He's saying, when building out the fixed income portion of our portfolio, is there a recommended balance of FI 68 and FI 55? Do we want more FI 68, or is it okay to have a greater amount of FI 55? What do you think for Brian there, Shana?
Well, Brian doesn't say how old he is. If it's the Brian that I'm thinking, he's probably in one of the younger models. So what I would say is that the younger you are, the more time you have, the more aggressive you can be. FI 55 is definitely going to be more aggressive than FI 68 because it's sort of a high yield fixed income investment. So if you're younger, I would lean more towards the 55 than the 68, and vice versa. If you're older, if you're closer to retirement, I would lean more toward the 68, probably have a little bit less volatility. 55 is more likely to correlate with equities or to move in the same direction as equities. But, you may, if you're in one of the youngest age models, you may not want either one of those. Or if your risk tolerance is very low, because you can have volatility, you can have downside risk in these two funds. If your risk tolerance is very low, you may just want to stick to the part of your whole fixed income allocation in just the CDs or the treasuries that in the way that we're suggesting for the partners.
Yeah, good, Shannon. And Brian did just mention on the chat, he's in the 45 to 55, so a little bit of the younger age, kind of in the middle. Yep.
Yeah. So you could do 50-50 or a little bit more toward the FI 55.
Yeah, awesome. Shannon, we got a comment here from Claude. I'd love to hear your thoughts on it. I wonder if the AI stock surge will be the next bubble to pop. You have any thoughts on that one?
Probably at some point, but I think we've got a ways to go. I mean, the AI stocks, the chip stocks really have been responsible for a good bit of the upside in the markets that we've seen. You know, but I mean, there will be some losers in there, but we need this first part of what these companies do to even get the whole AI agenda underway, which that's to be determined whether that's going to be good or bad. I know we all have our opinions on it, but you know, to me, I've dabbled with AI a little bit here and there, and it doesn't really seem like anything more than, at this point in time, than just maybe a little bit better search engine than some of the things that we've seen. But I know it's got a long ways to go and lots of potential for good or bad. Well, folks, if you're listening to a outlet that only carries a short version of the show, we wish you a good day. For the rest of you, hang around. We're going to be back with more financial issues right after this.
Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
Here at FISM News, our mission is to provide you with news from a source you can trust.
The news is a constant reminder that this world is not our home. It is marred by sin, resulting in wars, brokenness, and divisiveness.
Jesus promised that he will return soon to judge sin and make all things new. Until then, we place our hope in him.
This is the good news, the most important truth we feel compelled to share.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. Well, why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
Initially, when we became members, I thought, what if this doesn't work? I mean, we're going to give up this whole concept of insurance, you know, and we're going to trust God and his people. And it was like, yeah, well, of course. You know, I'm going to trust an insurance company to come through for me, or I'm going to trust the church to come through for me. And that's a no-brainer. I love getting the monthly share that I give to each month that has the name of a real person and their real medical concerns and a prayer request, you know, for them. If I have a need, I know I can go get care. I can see the providers I want to see. I don't have to worry if they're in my network. And if we need medical care, Samaritan is there.
A community of Christians paying one another's medical bills. For more information, go to financialissues.org and click the Samaritan Ministries banner.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. We're so glad that you're sticking with us, and we hope that so many in our new NRB audience is able to find us on other outlets as well, because you just never know when we're going to, to stay on an outlet, to redirect our dollars somewhere else, or sometimes stations decide not to carry the program. So the best way to make sure that you always have us is to get the phone app, whether you're Apple or Android. You can do that, and with that, you can also, if you have a smart TV, you can get the app over there and make sure that you're able to watch the program there. And at financialissues.org, that's a great way. Other ways that you can watch the program, just so you know, if you do podcast, Apple or Spotify, we're there. We're also on social media, Facebook, YouTube, Rumble, Instagram.
Truth Social. Right?
Truth Social. Did I say Rumble?
Yes, you did. And I think we're not streaming on it, but we are on X as well, or Twitter. I can't get used to X.
I know, I can't either.
Yeah,
I don't. I mean, I think Elon Musk is a pretty smart guy, but I still don't get that.
That was not a smart move.
Rebranding,
I know.
Companies have turnaround stories all the time, and they don't change their name. But
yeah, absolutely. Shana. Sorry.
So much easier just to call it a tweet, or what do you call it now? An X?
I have no idea. Now it's like a repost. Apparently, I don't know. It's ridiculous.
Yeah.
Shana. Speaking of companies, kind of turning course, but in a different way here, we thankfully made it through Pride Month. Yay.
Praise the Lord. Hallelujah.
All done.
And there was no fire and brimstone.
Yes, seriously. That's a testament of God's grace. Year. Seriously. Yeah. We need to continue to pray for God to show his grace on us as a country, because we certainly don't deserve it. But, Shannon, I saw an interesting headline here that companies are staying quiet during Pride Month. We talked about this was a quieter Pride Month than, previous years, but it seems like money is still flowing to some of these LGBTQ plus causes. So there was a report that came out that actually said that there are some companies continuing to contribute. Now, one particular LGBTQ group known as GLAAD, they said Friday that the group did not see donations or corporate support decline this Pride Month, but it stayed the same. Their CEO said that even more companies are getting involved in year-round LGBTQ philanthropy and activism. I think, Shana, at this point, there's like 4 or 5 months that could be considered Pride Months, whether it's Trans Month or something else like that. The National Park System on Friday opened the first ever LGBTQ visitor center with financial support from several big name companies. And of course, President Biden made an appearance at the Stonewall National Monument Visitor Center opening in New York. So my question for you, Shana, with Pride Month in the rearview mirror, thankfully, what do we make of a month that was markedly quieter than last year, even as we're seeing what seems to still be an uptick nonetheless?
Yeah. Well, it doesn't make me very glad that companies or corporations are still using corporate dollars, shareholder dollars, to support their organization.
Yeah.
But, I said this to you several times, maybe on the air, maybe just us talking, but it did feel quieter this year, but I didn't really have any data to confirm that until I saw this study from Gravity Research that is, Gravity is a Washington, D.C. based reputational research firm.
Yeah.
So, one of the things that their study said was that 45% of Fortune 500 companies Fortune 100 companies had at least one social media post on LinkedIn or X that was related to Pride as of June 21st. Wasn't quite the end of the month, but that was 45% compared with 51% last month. So Fortune 100 companies, those are the 100 largest companies that are out there, and they're the ones that are in the crosshairs more often than not. Speaking of crosshairs, we think of Target, we think of Bud Light, we think of Disney, we think of Nike, all of which have had a lot of backlash from their customer base. And, I think that has made some of them, some of those woke companies wake up a little bit and smell the coffee, that, know where and really figure out where their bread is getting buttered, and, look at their target market, do some things that real businesses do. Let's look at our target market. Let's look at, the demographics of our customers. Let's, and let's not offend more than half of our base. In some cases, like in Tractor Supply, I would venture to say probably 90% of Tractor Supply's base is going to be very conservative. So, their report also said, they surveyed only 45 corporate executives. So, I don't know how well, how deep this survey goes, if they're really focusing in on just those large companies. Those are the ones who are most prone to do this kind of activity anyway. They said 78% of their companies, this was back in April, 78% of their companies did not plan to change their Pride strategy for Pride Month for this year. 13% were unsure whether they'd make changes, and 9% said that they did plan to revise their strategy. So whether they said it or not, I think a lot of them did, and speaking of the ones that didn't about face, we talked about, I think it was yesterday on the program, Tractor Supply, how they issued that statement that they're returning to the business of their business. They're going to start, investing in ag education and things that are really relevant and support the activities that are in line with their core business. They're going to dissolve their DEI department, this diversity, equity, and inclusion mess that corporate America has been engaging in, rather than just saying, hey, we're going to be a company that treats our employees with respect, and we're going to create an environment that our employees have to treat each other with respect. And we're going to promote people based on the content of their character. And we're not even going to care about what color their skin is or what their sexual orientation is. They're just going to, have an idea of fairness without spending, millions and billions of dollars and wasting precious time of their employees, making them, watch videos to figure out what they do and how they respond if their male coworker shows up in a dress. It's just silliness that really is just decreases productivity all across the board. So, I would imagine that, and Tractor Supply said that they were making these changes. They were going to stop contributing to gay pride parades and do away with their DEI department and all of that. And, I guess they heard from their customer base. And, if they really talk to their farmers and ranchers, they're going to really make the connection. What does chicken feed and farm supplies have to do with homosexuality? I'm betting that farmers and ranchers know far more about the truth about gender and sexuality than the Harvard scholars do. What do you suppose would happen if a farmer tried to hatch eggs for a group of hens where there was no rooster present? Probably wouldn't have much success. Right. Or if they pinned up two bulls and expected to get calves. Or, probably wouldn't have a very good experience if they tried to milk their bull. So we can learn a lot about our Creator by observing His creation rather than being wise in our own eyes.
Amen.
Speaking of wise, let's hear from Craig Halgert. He's gonna come in, and speaking of farmers and rangers, we're gonna have the ag report here. After we hear from Craig, we're gonna take a short break, and then we'll be back with more financial issues.
Craig Halgert with your financial issues ag update for July 2nd. Well, corn traders seem to have absorbed the larger than expected planted acres number that the USDA gave us on Friday, and their attention is now shifting to the potential yield size. Now, the adverse weather in the upper portion of the western corn belt was reflected in yesterday's crop rating, as it slipped down to 67% good to excellent. And while that is still in a historically good rating, it's a 2% week-over-week decline, and that may have some traders concerned as we head into today's session. At the closing bell, December corn was 1/4 cent lower at $4.20 per bushel. Soybeans spent the session pricing in the smaller soybean acreage that Friday's USDA report presented to us. The market also benefited from the USDA releasing a strong monthly crush number of 192 million bushels. Now, the price spread between Brazil and the U.S. is now down to less than a dime, although the freight advantage to China keeps Brazil as the preferred choice for that market. The close November beans were 7 cents higher at $11.11. With funds holding a huge short position in wheat, it was just a matter of time before we had a short covering rally, and that's exactly what yesterday gave us. Weekly export inspections were slow, and Russia continues to dominate the world export market, so I don't look for this rally to have much staying power, but it was sure fun while it lasted. We had Minneapolis September September wheat 19 1/4 cents higher at 632 1/2. Kansas City rose by 13 1/2 cents, closed at 599 1/2. Chicago was 16 3/4 cents better at 590 1/4. Cotton futures had a bit of a bounce. We had December futures up 41 points at the closing bells. They settled at 73.10. Livestock futures, on the other hand, all sold off. August live cattle were $1.15 lower at $184.27 1/2 per hundredweight. August feeder cattle dropped by $1.92 1/2 as they settled at $257.37 1/2 per hundred. And August lean hog futures were $1.32 1/2 lower, closing out today at $88.17 1/2 per hundredweight. Class 3 milk futures actually looking a bit oversold, so I wouldn't be shocked to see a bit of a rally in this market. We kind of had the start of one yesterday with August futures up 3 points at 20.07. Well, this has been Craig Howgard with your Financial Issues Egg Update. We'll be right back with more financial issues after this.
If anybody's listening, thinking about joining, there's nothing like it. It's been great. I have peace of mind. I feel confident continuing to work. There's just a lot of things that y'all have added to my financial peace.
You guys are the man. So I encourage everybody to partner, get in there and watch the videos. Portfolio after portfolio, you hear the stories. It works. And you guys make it possible. And I thank you for that.
Married couples or even engaged, as you're coming together, working on your finances, God has blessed us incredibly. And it's been incredible to see what he's done in our lives. Just want to thank you, Financial Issues.
As a novice investor, which I am, and I'm certainly learning so much from y'all. Thank you so much. Y'all take the fear out of it. And my portfolio is doing great.
You've really encouraged us, and I know you've probably encouraged so many others as well.
Become a partner today by simply going to financialissues.org/join. Click the green button to become a partner. That's financialissues.org/join.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. We had a little bit of comic relief here in our break here. Sometimes I wish you could hear our conversations. But, you know, I was telling Seth that I've really seen some positive signs of turning back in America and, you know, turning back towards our Christian roots. We've gone so far as a country, you know, talking about Pride Month and all of those things and the battle for the sanctity of life in this country. You know, we saw a positive thing. I think we just celebrated, 2 years? Was it 2 years of the overturning of Roe v. Wade? And,
absolutely.
You know, I read an article that I'd sent to Seth recently about, it was in USA Today, and it was an article that was just lamenting over an abortion clinic, a Planned Parenthood clinic in Texas, and how they were maybe it wasn't Planned Parenthood, but it was an abortion clinic, about how they used to be just bursting at the seams with clients every day, so much so that their lobbies were overfilled and there were people waiting outside on the streets and, you know, to come in. And you had the employees in there talking about how sad it was to, you know, look around and see a coffee cup from their coworker that doesn't work there anymore because they had to lay them off because they're not doing abortions, and how their whole purpose in life is just they don't have purpose anymore because they can't help women abort their babies. And I was just reading that going, what in the world? I mean, are these people real? I mean, you read in the scriptures that those who are rejecting Christ have blinded eyes, and it's just amazing to me. I don't know. It's just amazing to me that can actually happen, and that that there's such a drive to kill babies in this country. But we got a little bit of good news, didn't we?
Yeah, we sure did, Shana. So the state of Iowa ruled barely, but they ruled in favor 4-3 on Friday to override a ban on the implementation of the state's heartbeat law. Biden obviously condemned this, but it's upholding the state's 6-week abortion ban, claiming that it jeopardizes women's health, which is one of the main talking points, Shana, and it's a complete lie. It's one of those fabrications, though. The ruling coincided with a new Rasmussen report survey found that Democrats' advantage on the issue has dwindled to statistical insignificance. So this is great news here, Shana, and we're, just like you said, we're seeing victories here. We're seeing some pushing back against this darkness. Of course, this is not possible without organizations like Preborn. That's why we love Preborn so much. They're on the front lines of this stuff. And really, I mean, I feel like Preborn does what Planned Parenthood claims to do. Planned Parenthood claims to be a women's health center. Preborn actually is. Preborn is there for the mothers, but also for the babies and for the fathers as well. And so that's just why we love Preborn.
Right. In that article that I read, they were saying, we're still helping with some women's health care issues, like helping people that have contracted STDs or, I guess like woman exams or things like that. But they're like, it's just not enough to keep the doors open. Case in point to what we have been saying for so long, that abortion is so lucrative for these clinics that's,
that's how they make their money.
It's not about helping women's health care. It's not about women's health care because they're still able to really do women's health care. Now, but it's not enough to keep their doors open there, so. Yeah. But, yes, thank God for organizations like Preborn because, even with the closing of these clinics, the battle for life has taken on a new form. They've got not a new weapon, but one that has gained popularity, and that's the abortion pill, chemical abortions. And, Preborn is very engaged in that battle too. So it's not just with the clinics. And so we're grateful that we get to come along alongside a great organization like Preborn.
Amen. Shana, we have a couple questions that are over on Ask Shana if you want to answer some of these babies here.
Let's do it.
Let's start with Chris, is 53. Chris is saying, I'm using the 45 to 55 stock model. Plan's working out great with many blessings. Thank you, Chris. That's awesome. I'm glad that's working out for you.
Yeah,
he's saying, I'm doing a quarterly adjust and trying not to get out of hand. Normally, I go by the 3% max per stock and only really adjust if it pushes past 5 or 6 of the portfolio. Do you have any thoughts on that, Shana? He mentions a couple stocks he has, one of them being TE91. And then he has a follow-up with that, only adjusting a sector if it's more than 5% over the goal. What are your thoughts on that? What about if they're foundational? Should I still trim if it's over the 5 to 6% of the portfolio?
Yeah, so I think, the first part of that question was right on, going at the 3% max per stock, and then adjusting if it, it's going to fluctuate depending on what day you catch it on. So I think that's a good strategy, good way to follow the strategy. And then he mentions TE91, and I'm thinking that's UT37 maybe.
I was trying to figure out which utility stock that is. I couldn't find
because we don't have a UT3.
Yeah.
I think it's 37 because that's one that is up a whole lot. So yes, just because they're up a whole lot doesn't mean that you don't need to trim. Again, don't get Edward Scissorhands happy, trimming every day or every week or anything like that. Let your portfolio.
That's a good one, Shana. Edward Scissorhands happy.
Don't get, to where you're rebalancing or trimming too much. Let your portfolio do some work, even if they are foundational. So yes, if they're foundational, if you end up, there's if you had let TE91, if you had bought a 3% position when it first came onto the list, I'd be willing to bet that it's probably makes up, if you've never trimmed it, it probably makes up 20% or more of your overall portfolio. And that's just a dangerous position to be in, especially with as much as it's run up, So.
Yeah, good stuff, Shana. Thank you for that. And good info, too, on the, specifically those foundational positions. I've wondered myself, too, if because they're foundational, we can bend the rules a little bit. But it sounds like they should still follow that same target as, many of the other, stocks.
Yeah, it's really getting harder and harder to call companies foundational these days because we've had many foundational companies go woke, and we've had to sell some of them because they've started doing things that we can't get behind. So it's harder and harder to call companies foundational these days.
Yeah. Good stuff, Shana. Next one we got here is Michael. Michael's 56. He's got total of both traditional and Roth is about $178,000. I've cleaned the positions and have now come to the ETFs. Now, the ETFs and one mutual fund makes up 30% of my overall accounts. The ETFs have matured, currently up about 17%, $47,000. The mutual fund is struggling a little bit, loss of 16%. It's only 3.4% of the account. Should I sell these all and get back to the asset allocation model building? These are consuming a very large amount, and I'm unable to diversify. What help would you have for Michael?
Well, Michael, I think you kind of answered your own question there. The last statement that you make, that it's you're unable to diversify more if you don't get rid of those positions, is where you get to, because if you're using your portfolio tracker, once you're going to have to, if those ETFs and mutual funds are not the ones that are in our model, then you're going to have to put them in the other category. So that's going to throw your other category way out of whack, and you're going to have to do something with those things and able to address the underweighted sectors that you're naturally going to have. If you have an overweight in one sector, it has to be naturally balanced by an underweight. So you're going to have to address that. The good news is that if, I think you mentioned here, all of the funds are in traditional and Roth IRAs, you won't have any tax consequences to do that. So, if they're not biblically responsible, they're not in our model, and you're not going to have any tax consequences, I cannot think of one good reason not to get rid of them.
Nice, Shana. That's good. Benjamin's up next. Touching on a topic we talked about a little bit earlier with Claude's comment, what are some AI companies that I could invest in? He's 50.
So there's a few that are on the list. I mean, if you look in technology, obviously you're going to find some in our technology list there. We don't really give specific stock recommendations over the air because sometimes that can do more harm than it can do good. People may just hear us talking about a particular company and just decide to buy it and not really understand how that works with our portfolio strategy, or if it's even right for them to own. So we don't give specific recommendations over the air. But if you're a partner, I would say look in the technology sector, look in healthcare. There are going to be some healthcare companies that can really benefit from AI once it gets more and more refined. Believe it or not, companies in the utility sector are going to benefit. That's one of the ones that we mentioned earlier, UT37. That is the AI trend, or the AI, what's happening with AI is one that has helped that particular company a whole lot, because guess what? It takes a whole lot of energy to run AI, to run those big computers, to keep them cool. So companies in the utility sector that are geared towards providing energy towards some of those data centers are going to be some winners as well. So lots of things that can be affected, just like with the internet. There was a lot of companies that virtually almost every company today benefits from the technology of the internet. So, well, folks, we're out of time for today. We hope that you're going to tune in, come back tomorrow for more financial issues, because Lord willing, we're going to be here reminding you that everything belongs to the Lord, and we want to be here to help you use those resources in a way that's going to honor God, so that when the Master comes back, and he will come back, and ask you the questions on how you did with the time, talent, and treasure you managed, you will hear the words, "Well done, good and faithful steward." Come back tomorrow for more financial issues. Check us out in the meantime, financialissues.org.
If we ever forget that we're one nation under God, then we will be a nation going under.
Thank you for joining us. This has